Hello and welcome to Wall Street Wire News, where you get today's market in minutes. Hi, I'm Dave Okenquist. Joining me is a special contributor to Wall Street Wire News, former Wall Street bond trader, Mr. Rodney Johnson, and Mr. Charles Sizemore joins us once again, the editor of the Sizemore Income Letter. Fellas, feels like every week we get a sort of a seesaw between the market popping up to record highs or falling down because of either comments by the Fed or rising interest rates. And yes, we got a little bit of the latter this week. Fed Chair Jay Powell came out and said, look, we're not going to really do anything yet. We expect higher growth and higher inflation. And then there was some news this morning that the Fed is not going to extend a rule that would require banks not to carry as much capital, which could see interest rates rise. Rodney, yes, we've covered this a bit, but I think this is important. So I'll let you lead off with your take on what's going on with the Fed and the markets.
Well, it is important because as the inflation worries kind of seep into the economy, then you have investors saying, hey, wait a second, maybe I can get more on bonds than I can on stocks. It's a worry and it's a psychological piece. It's not a reality piece yet, because if you think through that, that would imply that people are selling stocks to buy bonds. And if they did that in big measure, they would hold down interest rates. And so because they would be bidding up the price of the bonds. And so this is more of a psychological shift in how we're looking at things. And it is driven by Powell and the central bankers that he works with at the Fed. Because Powell essentially, as I wrote, said, look, he did his best Alfred E. Newman. You know what? Me worry? Inflation? I don't see no inflation. And even if it shows up, we think it's transitory. And so he gave you the whole, I don't think it's there. And if it's there, it's not going to stay. The only way to prove that to be false is in time. So you can't, even when inflation shows up later this year, which everyone expects, you can't say it's not transitory until you get a year from now and it's still there and moving higher. And so the big thing was what they call the dot chart, where each of the bankers on the voting committee say what they think interest rates will be in the future. Yeah. A few of them think rates will be a little higher by the end of next year. Only a few. And only a few more think they'll be higher by the end of 2023, not even a majority. And so this is the Fed telling you, look, they're going to sit on the sidelines for this. The bigger thing that's going on is kind of roiling under the market is what you actually mentioned of the Federal Reserve saying they're going to let a certain rule expire at the end of March that allows banks to hold treasuries as their capital. And so that was a big thing last year because people were moving to cash. They weren't buying treasuries. They weren't buying stocks. They were just saying, hey, wait a second, just greenbacks, like straight up real deal cash. And so the Fed wanted people to buy more treasury bonds. And they said, look, you can use this as kind of one of your requirements. And now they're going to let that roll off. And people say, well, wait a second, if they do that, our interest rate's going to move up a little bit more because these banks not only cannot buy more against their capital requirement, they actually have to sell some to go do something else to meet their capital requirement. A little bit of a tempest in a teapot, definitely inside baseball. It's going to be figured out within a week or two. The Fed is buying $120 billion a month in bonds. Other people want our bonds because, as Charles and I discussed, last week or week before, we're now the high yield offering on the planet. And so this is a little bit self-correcting because as interest rates go up and people buy more bonds, it actually puts a cap on interest rates going up. So it's happening, but it's going to moderate the pace.
Sorry, Rodney, you broke up there for a second. I thought you were finished. Charles, it seems to me like Chair Powell isn't so much saying it, and Rodney was specific with the language Powell was using, but I think he wants the economy to overheat a little bit. And we have an estimate for GDP growth at 6.5% for the year. I think that seems possible coming out of a dip, but that's a pretty big number, isn't it?
6.5 is the biggest number in decades, but it's there's a base effect. Okay, it's a 6.5% jump over last year's depressed levels. It doesn't mean it's we're back to trend already because we are absolutely not. Yep. What Powell wants to avoid is what happened to the European Central Bank. You remember, after the 2008 meltdown here, Europe had a whole nother wave of kind of slow motion meltdown with the sovereign debt crisis. First it was Greece, and it was Italy and Spain, and et cetera. That was a mess that dragged on for a few years. And what happened was, Mario Draghi did, whatever it takes in his words to save the euro, but then they pulled back what, in retrospect was too soon. They ended up kind of taking their foot off the gas, which ended up prolonging the mess even longer. At least that's the way the central bankers interpreted that. So, they watch each other, they learn from each other's mistakes or perceived mistakes. And Powell does not want to do what the Europeans did, which is kind of ease up, stop the stimulus too soon. And then we're right back into a deflationary slump. He said, you know what, I'm going to err on the side of too much stimulus, and we'll see what happens then. We haven't really had that since the 70s. The last time we had real inflation was late 70s, early 80s. So the Fed said, look, we might as well, the more recent problem has been deflation. That's been an off again, on again problem now for the better 20 years. Let's, if we're going to err, let's err on the side of inflation.
Rodney, quickly before we move on, do you agree with that assessment?
Yeah, I take a little issue with getting back to trend on GDP. GDP last year dropped by 3.5%. If we increase by 6.5% this year, it puts the average over the 2 years just under 6 because you have a little bit of geometric effect. Growing at 3% a year is better than we've done in a decade. And so this is, I think we're actually going to see more than that. I think the Fed is low on their estimate. The thing that would constrict GDP growth is supply chain. Look at Nike's earnings. They missed not because they're not selling stuff. They just can't get stuff, right? They can't get stuff in the ports in LA. And so we're running into a situation where we have so much money chasing goods. We just can't get the goods out the door being our restriction. And it's a weird thing because as Charles mentioned, Powell was talking about stimulus on the fiscal side, which he does not control, but he's been jawboning this thing for a while saying, look, we at the Fed are doing our thing. Look at our monetary policy, look at our interest rates, look at our bond buying. We're making it happen. You people over down the street in the Capitol, you've got to do your job and you've got to get some fiscal stimulus out the door. And there is no question that has happened at a phenomenal rate. And so that money is out there. We essentially borrowed from the federal treasury, which is the lowest borrowing cost on the planet, in the United States, and then handed all the money to American cities and states and companies to spend. And so it's been a weird thing where we are all spending on the national credit card. And so we're using very low interest debt to finance what will be the spending binge over the next whatever number of months or years that it takes to get it through the system. And it's gonna be pretty dramatic. The question is what happens when it's done. When this effect wears off in, say, the summer of 2022, is that when you get this, not deflating as in bad to negative, but this much slower growth rate because it's out the door. That I think is a big concern.
Yeah, I think so too.
To paraphrase The Departed, which is arguably the best movie made in the last 30 years, Jay Powell is Mark Wahlberg. He's the guy that does his job. Congress is the other guy.
The other guy.
Who's Jack Nicholson in this scenario?
I don't know. I haven't thought that far ahead.
All right.
Don't ruin the analogy, Dave.
Sorry about that.
You totally rained on my parade, man.
That's right.
Now, guys, as we see the economy rebounding, 6.5%, as we mentioned, and some inflation rising, a lot of this is, of course, going to be driven by, yes, the lockdowns, the clampdowns, those have been eased. People are on the move again. We had a record number of travelers in air travel. So we've seen Lyft, the rideshare company, as well as Uber making a strong recovery. Charles, you mentioned before we started that you're now stateside, so you must have gotten on an airplane and made your way over here, unless you did a boat. I don't know. I don't know your travel.
It's a really long swim from Peru.
Yeah. But so did you notice? I don't know what was it like in the airports there? Does it seem like maybe the mood was different from maybe the last time you hit an airport?
No, because remember, a lot of the rest of the world is still at a how do I want to put this? A stricter degree of lockdown than we ever were. Right. So in the case of Peru, Peru is having a surge. They actually had, up until I think about a week ago, Peru was still under quarantine. So there was nobody coming to Peru because if you went there, there was nothing to do. If you went there, you had to do a mandatory quarantine for 2 weeks. So the backpackers wanting to see Machu Picchu weren't exactly lining up to go spend 2 weeks sitting in a hotel before they could see Machu Picchu. So the airport, there is no airport. It's just you walk into the airport in Peru and there's 3 people at the desk, waiting to check in, and the plane is empty. So I think while things are picking up here in the U.S., globally, we're not quite there yet.
Now, But what we could see at least, though, I mean, stateside, if we're thinking of even if inflation will be weighing on stocks here and there, but I think
I think this is going to be a fantastic summer for Disneyland, Disney World. I think there will be people that have been kind of putting off travel until they were vaccinated, or until they just felt safe, or until they just can't stand it anymore and need to go somewhere. So I do think this will be a fantastic summer for travel.
So there's a caveat in there, and it's interesting you mentioned that, Charles, because Americans are going to be on the road. We are going to be making this happen, right? I mean, I'm going skiing next week, and people are going and doing their thing. And I was vaccinated a couple of weeks ago, and so I think, like you, that we are opening up, and it is just going to be an avalanche, right? But as you mentioned, we are so different from the rest of the world, and Peru, of course, is not among the country club countries. But if you look across Europe, they are having another surge. And so the thing is going to be international travel. And you mentioned Disneyland. I find that one particularly interesting because Disneyland, Disney World, I think you mentioned Disney World, they get so much of their traffic from overseas. And so are we going to have enough international travelers to make up, enough domestic travelers to make up for the lack of international travelers this summer? I know that Disneyland just opened, but they opened with very low capacity. I want to say 15%. And so they're maxed out, for what they think is coming. Disney World has been maxed out for some time because they're operating at a lower capacity as well.
We're not at summer yet, though. By the time summer rolls around, I think it will be a different story. Plus, we're on track at this point that every American that wants a vaccine will likely have one in the next 6 weeks. I mean, at that point, it's just the stragglers who aren't in a hurry, but everybody that really wants one is going to have one very, very quickly.
But that will they be in a number large enough to replace the missing international?
Well, no. This is where I'm going with that. So what do you do with tens or hundreds of millions of vaccine doses and no arms to put them in? Well, you open the floodgates to tourists to say, hey, come to the US and get vaccinated. I've already seen some stories about that. And there's been a ton of people not really eligible for the vaccine already kind of sneaking in. There's going to be a lot more.
Shots like candy. Sorry.
Well, no, I can't imagine that's going to happen because you don't know if they have you don't know if they're infected when they get here.
Oh, you take a test. When I got on a plane to leave Peru to come here, I had to get a COVID test before I got on the plane. That's what most of the world requires now. You have to have a negative test before you get on the plane. So
I would be very surprised to see that in large enough numbers to replace the international tourism at places like Disney World, and particularly New York City, where more than 40% of their tourists are international.
New York City is still screwed, I think. But
it's gonna be a hard summer.
Yeah, New York City may not recover for 20 years. It may never recover. But I think a lot of, more the, I don't know, Disneyland type places, the places you might bring your family. I do think they'll do. I think they will benefit from vaccine tourism. Is it going to be big enough to compensate for? I don't know. Is it going to be as big as the usual touristic hordes?
Yep.
I don't know. Maybe. I mean, first off, I'm not going to go to Paris anytime soon. I mean, I'm not going to go to Paris and have to lock down in my hotel, right? There's nothing to do in Europe. But Europeans can come here, I think, far more easily than we can go there. And I think that's going to be the case for the next several months. So we'll see.
So let's unpack that for a second. I find that to be fascinating because the vaccination visa, right? People are talking about it. They're trying to figure it out. They need to get it figured out because places like Paris need it. And I happen to be a big fan of Paris. I would love for them to say, hey, if you can prove vaccination, you can show up, because I would hop on a plane tomorrow because
you'd have the Louvre to yourself for the first time ever. You could just go to the Louvre and enjoy it without having to bump elbows.
Les Jardins, you could see all the cool things with no tourists. It would be the coolest thing ever. And so I would do that.
Yeah.
But think of the flip side, that you essentially create an international vaccination site at the convention center in Orlando, which is a massive place because they do all these conferences. And just tell people, show up to Orlando, get your vaccination, then get on the tram and go to Disney World. Just create the factory right there, right?
They could do it in the Disney World parking lot. They could do it in the airport. I mean, they could do it anywhere. It would be, and they could charge cash. I mean, remember.
And Ron DeSantis is the governor to do it. I mean, make this happen.
He would love it. Yeah, come.
It'd be counting the money, but at this point, no one's paying for the vaccine here. It's free to Americans. I mean, in theory, your insurance company pays for it, but if you don't have insurance,
Yeah, they would have to use the single shot, right? I mean, because you're not getting people back for lucky number two. But
well, no. Think about it. You convince someone to stay here for 3 weeks. Think about, they're going to be in a hotel for 3 weeks. They're going to be spending money here for 3 weeks. That's a pretty good idea.
Yeah, but are they going to go to Disney World every day for 3 weeks? I mean, I think if I'm the governor of Florida and I am the, person who's now running the theme park section of Disney, what I want is a new guy every second or third day because they spend the most money. And so I'd be pushing J&J as hard as I could to make this happen.
I just love the idea of the state of Florida coming out with a new the tourist advertisement saying, lockdown, come to Florida.
You can have Mickey Mouse administer the shot himself.
Get jabbed by Mickey.
Yep.
But there's one last thing on this I wanted to mention, because we're talking about airlines, certainly ride sharing and theme parks, that sort of thing. I agree 100% that this could absolutely boom in the coming months. But one sector is cruises, which surprises me a little bit. Curious to get a take from both of you. The Carnival CEO says the downturn could last 2 more years, not expecting a V-shaped recovery. I'm sure many people who love to cruise and couldn't over the last year or two would love to get back on a ship, I think, or maybe is there fear? Why is Carnival going to be down 2 years while everyone else is going to pop? Charles, take this first.
There's a psychological effect, man. You saw what was going on the cruise ships. That was horrifying. It looked like a scary movie where people were, stuck in their cabins. They couldn't leave. They were no port would take them in. There's a lingering psychological effect to that. I don't know that I have any interest. Well, to be fair, I never really liked cruise travel. That's not my style. I was never really interested. I was never really the clientele for a cruise. But any inkling I had, there's just this, I don't know. It's not like I'm scared of a cruise. It's more like it just doesn't sound appealing after watching, after the cruise ship being described as a petri dish. Long after, COVID has come and gone, it's like, well, what else am I going to get? Am I going to, I don't know. It's like an open salad bar. Those are just kind of gross, right? But it's an open salad bar the size of a ship and you can't leave. So I think there's this lingering psychological effect. I think it would give it enough time, it'll dissipate. But I think 2 years, I would listen to Carnival. If he says it's going to take 2 years for people to get over it, he's probably right.
Rodney, if we can get over our revulsion at the salad bar and enough people get vaccinated, what's stopping Carnival from bouncing back?
Well, I think there's 2 levels here. And so, I kind of considered this. They should create vaccination cruises, right? In terms of if you have a vaccination passport, you can be on this cruise, and get rid of all of the things that remind you of the disease, all this, safe distancing, social distancing, and all the plexiglass and all the masks, just shunt it all. Because if you're vaccinated, the argument is you don't need it anymore. That's why you did this, right? And so if you can make the cruises interesting again, and make them comfortable again, to Charles's point, get rid of that psychological piece, then you got something to do. But that speaks to an older clientele. That speaks to the Viking River cruises where, you're not taking your 9-year-old to cruise the Danube, and so, or arguably not, right? These river cruises. And so it's a different level. Carnival, if you're doing the family thing and you got a bunch of kids running around and all the people in the pool and everything, we're not talking about vaccinating children anytime soon. And I can see where this would be certainly a consternation for people to say, you know what, maybe I don't want to be in the pool where 712 other people have been in the pool just this morning. And so that can be a thing. But I think you could get these higher level cruises that are really adult driven to be back on track much sooner.
Well, the other issue, though, is you have to have a place to go. And a lot of the ports of call still are not completely open yet.
And that's probably what the Carnival guy's talking about. The cruise to nowhere, what do? You leave port, you come back to that same port. That's not interesting.
Just float around in the ocean for a week and come back. It's not real exciting.
Right. But if you have the vaccination passport, you could change that metric, because the tourist destinations where the cruises dock they're in terrible pain. They're the ones that are hurting so badly, right? Because arguably they're not getting the same level of stimulus as American companies. Cruise companies, by the way, are not American because they don't want to pay taxes on their boats and stuff.
Yeah.
And so I think the destinations would be desperate for something like a vaccination tool. But there's something involved in all this that we don't talk about much, and it's variants. You get a vaccination for this particular virus, right? What about the next variant that is not this one? We get a flu shot, or they're available every year because there's a different variant every year. And so we keep talking about this as if it's once and done and over. If we get a variant that's particularly vicious, this comes right back.
Oh,
and
yeah. They've already said we're probably going to need a booster every year, every 2 years, whatever it is. So
right.
Yeah.
And a booster for all people. Imagine that.
And you get a boost at every port of call. You get a boost.
Well,
and,
also, presumably you'd need, if you were a Johnson & Johnson recipient, you'd need a Johnson & Johnson booster. If you were a Moderna recipient, you'd need a
Right.
Moderna booster. Like would be specific to whatever vaccine you already had. So it's going to be a logistical experiment.
Yeah, fascinating to see what develops. Now, finally, as we're talking on as the economy recovering and maybe ways for some ideas for people to get in on stocks that could pop. Some are already beginning to pop. Infrastructure stocks, I'm speaking of specifically, already rising on rumors of a plan coming down from the White House. I believe there's going to be an announcement next month by President Joe Biden. We talked a little bit about the infrastructure space earlier, but I got an interesting stat here from Wall Street Wire News. We have an infographic here. The American Society of Civil Engineers. Now, this is not just for legislation, but what they estimate is needed to help bring back American infrastructure on surface transportation: $1.2 trillion, drinking water, wastewater, and stormwater, $434 billion, $380 billion for schools, nearly $200 billion for electricity production, $100 billion for airports, and then down the line. Guys, this looks like this is coming. Wall Street certainly anticipates it. So what can investors, what should they be keeping their eye on as this legislation could potentially roll out, Rodney?
Well, I've been looking at this for a while and looking at stocks that are in this space. I mean, I like companies like Vulcan Materials, which makes the asphalt, concrete, and the other things that are surface transportation. I'm a big fan of copper. You look at what's going on around the world with building. Every time you build something that needs conductivity, electricity, whatever, you're using copper. And you're building that in terms of all the building in China, as well as this move toward electric cars. It's a lot of copper for the cars. It's a lot of copper just to get all the electricity to people, to harden the grid so that you can do the distribution. Mm-hmm. And so Freeport-McMoRan is a name that's pretty good in that space. They're essentially a sub for copper. And we haven't even talked about inflation on the other side for food and other things that are coming from a whole different standpoint. But your numbers add up to about $2.5 trillion on infrastructure. I don't think we'll get that, but we'll get something. There's no question we'll get something, because we've gotten used to the public purse at this point, and we're ready to go.
That was some good addition on your part in your head. Charles, what do you think? What are you seeing in the infrastructure space?
You know, Goldman Sachs puts the estimate as high as $4 trillion. That they think the overall infrastructure plan could be anywhere from $2 to $4 trillion. So lower into that, you know, $2 trillion is roughly 10% of GDP. It's a little bit less. I guess it's about 9%. But you know, double that. You're talking about huge numbers. Now it's going to be spread out over, you know, the better part of a decade, but still that's a big number. So yeah, I agree with Rodney. I really like copper, steel, iron ore, cement. I really like all of the gritty kind of the stuff you don't want in your backyard. Yeah, that's all the stuff that's going to do really well over the next several years.
What do you mean not in your backyard? Like uranium?
Nobody wants a cement factory in their backyard. Nobody wants it's ugly. I mean, people want like the nice, you know, pretty technology stuff. I mean, having like a Tesla charging station in your neighborhood, that's kind of cool. That makes you look like modern and everything. Nobody wants gritty commodity stuff in their neighborhood. That's just ugly. But that's the stuff that's going to do well, I think, over the next call it decade.
Yep. Rodney, did you have anything here before we close? It looked like you had something there.
No, I think it's good. We also have to keep our eye just on basic foodstuffs. I mean, this is important, and we're seeing the price of food rise around the world, and I think it's going to show up at our grocery store soon.
Excellent. Well, I want to thank you all for watching. Gentlemen, thank you so much for joining me to discuss all these important topics going on in the world of finance and economics. I'd like you all to sign up for our free newsletter at wallstreetwirenews.com. Rodney, when they do that, what kind of stories can they expect to get in the world of finance and economics over the coming week?
Well, the transition from technology over to what you would think of as industrials is happening. We've been talking about it for a while with the Dow moving higher and the NASDAQ, taking some hits. But it's very interesting to watch what's going on in the electric car space with Ford and GM doing pretty well, and Volkswagen finally getting its due. I mean, this company is leading the charge in electric cars. And guess what? Tesla is getting smacked around because people are finally realizing they've got a lot of competition and they're just not of size. I mean, the company makes 500,000 cars a year. They're not big, and it's a very small group that's buying, and they're facing massive competition. And I think that's going to be the story as we get through the spring.
Yeah. Charles, what do you have your eye on, and how can people find your work?
Yeah, I would agree. I think the meltdown in Tesla shares is probably just starting. That stock, I think it topped out as either the 5th or 6th biggest stock in America in the S&P 500, which is absurd. So I think there's more pain there. I think this bull market in the more traditional industrials continues. As for where to find me, go to sizemorecapital.com.
Great. For Rodney and Charles, I am Dave, and have a great trading day.